Welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by Justin Huhn, founder and publisher at Uranium Insider. Justin, thanks for taking time out today to come onto the show.
It's great to be here with you, Rob. Thanks for having me on.
We have plenty to talk about. We are probably going to touch upon all different things nuclear. We might mention some stocks. We might look at AI as well. But a question that I had, my first question I had written down was there seems to be quite a bit of opaqueness sometimes in the uranium price itself. So I was just wondering if you could just dive into what the difference is between the spot and the term price and just try and put that into as layman terms as possible because it seems to be a bit of opaqueness sometimes in the market.
Yeah, I would say that's probably putting it pretty lightly. It's incredible how small this market really is, considering that it's about 10% of global electricity production. It's an absolutely vital sector, and it's very, very small. The players are limited. The number of producers selling pounds, the number of utilities buying pounds. It's a very, very small universe. And the market for uranium is also very unique amongst commodities. There's not really a futures market. It trades very thinly, and it's unique in that it's highly illiquid. And so when you have right now in a particularly thin market, a small amount of demand come into the market, it actually shakes things up a little bit. And that's what we're seeing right now. The spot price essentially is uranium purchased and sold that is settled within a 12-month period or delivered within a 12-month period, let's say. Oftentimes it's not delivered. If it's pounds that are traded, it's sitting at a conversion facility in storage and it just changes hands on paper. So settlement in less than 12 months, and the term market effectively, officially is 12 months and beyond. So the long-term market is where nuclear utilities that are the primary end user and end demand for uranium procure most of the pounds that they need to fuel their reactors. And so that's where most of the volume is typically done. The spot market really is more of um, let's say, a surplus disposal market. It's where a small handful of traders get a little bit of offtake material from a couple of producers globally, and they'll consistently sell into the market. Some of the other producers, especially the developing companies that are just restarting brownfield production, are selling a little bit of pounds in the market. And utilities, when the price gets low enough, they'll do a little bit of buying in the spot market. And they've actually done a lot more this year than is typical. And part of the reason is because the term demand from producers, as far as the pricing demand, is significantly higher than they want to pay. So when you have the spot market flush down, the utilities will step in. And then the last piece I would probably just add here is that there's something called a carry trade that is sort of like the glue between the spot market and the long-term market. And this is where a utility that will have some level of mid-term demand, 2, 3, 4 years out for U3O8 uranium, rather than going to Cameco or Kazatomprom or Orano or any of the large producers and saying, hey, let's get a contract signed for this. They'll contact a trader, and a trader will sign a contract for delivery a few years out. They'll calculate the cost of carry, which is essentially the cost of storage at a conversion facility, the cost of capital if they have to borrow, and some level of profit margin. And if there's a significant enough spread between the price the utility is willing to pay in the midterm and what they can buy in the spot market, they'll nibble in the spot market, hold those pounds, and deliver to the utility a few years out. So when you see, like right now, we've got a midterm price probably in the mid 80s, and the spot price gets into the low 70s, and you start to see it happen. You see volumes tick up in the spot market. But yeah, so it's an illiquid market. It is very opaque. The only price that most people see on a daily basis is the spot price. And there's a couple of entities that will publish that. You can see it essentially for free. We subscribe to multiple paid services that give us multiple price updates throughout every day. And that's something that we are able to, pass on to our membership as well. So we focus a lot of our energy on following what's going on in the physical uranium market. So multiple intraday price updates in the spot market. The long-term contracting market is orders of magnitude more opaque, and you only have official price reports from Trade Tech and UXC, two of the primary price reporters, once a month at the end of the month. Besides that, sometimes you'll hear whispers here and there about terms that are being discussed between, off market between producers and utilities. And just a couple of days ago, there was a large RFP issued by the Korean utility. We can get into that later if you'd like. And that was public. So you saw their public pricing demand, and that's unique amongst the Koreans how they structure that. But very vague, very opaque. Ultimately, the pricing in the long-term market on a long enough time frame and on average will dictate the price movement in the spot price. And while the spot price can go more sharply up and down and much more volatile, a rising term price definitely does drag up the spot price, to speak very generally.
Thanks for clarifying that. I know that when I've spoken to Eric Townsend before, he incredibly infuriated at the opaqueness. I appreciate that you said that obviously for your subscribers over at Uranium Insider, there are multiple updates throughout the day. But overall, does that form of opaqueness, is it a bit crazy or is it just something that you've learned to deal with over the years? Or do you wish that there was more transparency for people in that particular field?
More transparency would be helpful, especially for the finance side of things, investors, let's say. As far as the industry is concerned, it's problematic how it's done, but arguably it's in some cases beneficial to the primary end users, which are utilities. And the price reporters, their primary clientele is nuclear utilities. So there really isn't an incentive amongst the utility side of the industry to change that. The opaqueness, generally speaking, benefits them. I think that actually might come to bite them in the rear end at some point relatively soon. And one example for that is the actual Korean RFP that was released a couple of days ago. They're seemingly largely in the dark as far as what the pricing terms are actually currently in the market. So right now, what we've heard ad nauseum from Cameco, which is the largest publicly traded producer, besides Kazatomprom, which is majority state owned. But Cameco basically is saying that what they want in their term contract metrics, to speak generally, for fulfillment later in this decade into the 2030s, and the whole industry lives in the future. That's something that everybody should understand. It's like you don't need pounds today and you go buy them right now. You need pounds 4 years from now and you negotiate a contract for 6 to 12 months to buy that uranium. It's very slow moving. It lives in the future. But what Cameco is saying, late decade, early 2030s delivery, long-term market, reasonable volumes. What we're looking at is floors for a contract in the $70, $70 to $80 a pound, ceilings at 120, 130 plus. So right now the spot price is about $72 a pound. The long-term price officially is 80, 82 for trade tech. And the way that so the term long-term contracts are can be structured really however the two entities come to the table and make a decision. What most of them look like is some blend between a fixed price that the utility will pay at the time of delivery that they decide upfront. So it'll be a fixed price at $80 a pound, and oftentimes that's what's called base escalated. So as the years progress towards the delivery time frame, they will escalate it at a certain percentage point that usually has to do with interest rates or inflation. So that's the fixed portion or a fixed contract, a base escalated. And the other typical form a contract would take is called a market reference contract, which at the time of delivery, the utility will pay essentially the spot price or a mix between the spot and the term price or a multi-month average of what the spot price has been over the last 3 to 6 months at the time of delivery. And in a bear market, when the price is stagnating or is dropping and the utilities have the upper hand and the sellers don't really have any leverage, the utilities want the fixed price all day long because they can budget around it.
Mhm.
And they'll be willing to sign large contracts, low price, fixed price. They'll do it all day long, and that's what they prefer. Well, the tables have turned over the last few years. We've seen the price of uranium, of conversion, enrichment, of everything across the entire fuel cycle rise substantially. Now we have the producers in the catbird seat, and they are able to dictate the terms that they want largely. And what the producers want, because they arguably have done a lot more work on the structural nature of this market and expect to see significantly higher prices out into the future. So the producers want market reference contracts as much as possible, or the largest percentage that they can negotiate within that contract to be referenced to the market at the time of delivery, because they all believe prices 3, 4, 5, 10 years from now will be much, much higher than where they are now, and they want exposure to that. So Cameco wants market referenced contracts,
Mhm.
70 to 80 floors, $130 ceilings. And they're saying this publicly in their conference calls. Korea Hydro Nuclear Power comes out 2 days ago with a public RFP, request for proposal. And the Koreans do this uniquely. So most of the time an RFP is, we need this many pounds delivered during these years. What do you got? Right? That's a typical RFP. The Koreans say, we need this many pounds. We need it delivered these years, and this is what we're willing to pay. And so they are asking in this RFP for 2026 2027 to 2036 delivery, a 10-year contract
Mhm.
for 8.8 million pounds, so 800, almost 900,000 pounds per year. And they want 70% market reference with floors at $65 and ceilings at $101. So they are saying essentially they're going to pay significantly less than what the actual going price in the industry is right now. They're utterly in the dark. So maybe they're taking like a page from Trump's book and asking something ridiculous right at the front and then negotiating something more reasonable down the road. That's possible. But it just goes to show you that old habits die hard. The utilities have had a very easy market to purchase uranium from for the last 15 years. And really, a lot of these fuel buyers have been around for 30 or 40 years, and they've had a liquid, abundant market, a ton of above ground mobile inventory, a ton of liquidity just until the last couple of years. And the tables have turned here. Now, to end this point, going from here on, essentially, this market is going to be driven by pounds that are literally coming out of the ground, not pounds that are sitting in a can above ground storage, just inventory that's liquid. So utilities are having to buy from producers, buying pounds 3, 4, 5 years out that aren't coming out of the ground yet. And in some cases, from projects that haven't even been built yet. So it's a very fragile producer's market, and the utilities have no choice but to buy in this market, and the terms are significantly higher. And that opaqueness, while it benefits utilities in a certain liquid market that where they have the upper hand in these contracts, I would argue the vagueness and the opaqueness in the pricing mechanisms is going to be a detriment for utilities going forward and going to be a boon for the finance and investing side of the market.
To me, that sounds like there's, as with most things in life, there's pros and cons to both things there. We've mentioned at the start, and you've mentioned there a couple of times, looking into the future. Obviously, you have been doing this for a long time. You probably are quite excited about the narrative, to be fair, that's changing at the moment. So, if you can, give a recap of what things were like when you first started, and then what that narrative change has been and why, and then what is possibly lying ahead for everyone in the future.
That's a really good question. I think that context is important because anybody who's kind of showing up to this investment thesis right now, they can take a snapshot of the picture of the industry and maybe think that that's just how things are and why are things going to change from here and should the price go any higher, et cetera. The typical questions you might ask for any commodity investment thesis, right? You want to understand the supply and demand. What are the drivers of higher price if you want to be long? But to give context and go back, so I first honestly heard about this investment thesis in December of 2016, which happened to be the actual month that the spot price bottomed following the bear market that was triggered, well, initially by the GFC. So the spot price peaked in '07 and it dropped back down, started to recover. And then we had the Fukushima Daiichi accident in March 2011. From there, not only was that let's say, a terrible hit to sentiment for nuclear and therefore the uranium trade, at least for the short term. But really, what happened there, the Japanese shut down 54 reactors. The Germans made a plan to phase out. The Koreans made a plan to phase out. The Belgians made a plan to phase out. The French made a plan to cut their reactor fleet in half. All of these reactions to that event were extremely bearish for uranium itself. So you had producers ramping at the same time, especially Kazatomprom, 100% state owned, with a rapidly depreciating tenge. We're producing hand over feet, just absolutely pouring uranium into the market as the price was declining. So we had a long bear market that bottomed in 2016 for spot, bottomed in 2018 for enrichment in the long term. So I first heard about it then. I knew nothing about nuclear energy. I knew nothing about uranium. Leading up to that, I primarily was a momentum and technical trader, and this was a whole different ball game. It was a contrarian bet that really triggered my interest. And I really enjoyed the idea about deeply fundamentally learning about something, having this long time frame to be able to understand it and to place my bets. And at that point, it was a bet on the industry going from absolutely terrible to just bad. Nobody was interested in nuclear. Nobody was interested in uranium. The price was trading at $18 a pound spot. The cost to pull it out of the ground for everyone except for Kazatomprom was 30 or 40 bucks a pound. So it was like, this has to rise eventually, at least to the cost of production. That was the contrarian bet. And that was a bet that I made in relative size in the ensuing couple of years. So that was late 2016, 2017, 2018. I really started to kind of establish positions and educate myself in the sector. And the more I learned, the more I became excited about it. I'm an unabashed nuclear advocate, regardless of this investing thesis here. And for context of how the market has changed, the 20 teens were really driven by the Fukushima Daiichi accident, the abundance of oversupply that came into the market. China bought a lot of that oversupply, but I would argue there were still at least probably 150 million to 200 million pounds of above ground mobile inventory oversupply that was available to the rest of the world that took many, many years to work through. And the price got so low to the point where the utilities, all that they were doing was scooping up inventory and signing carry trade contracts. They were ignoring the producers that were on life support. So most of the producers shut in mines, disappeared, the developing projects, no money for exploration, no money for development. And all you had was a small handful of producers, and Cameco being one of them. They shut down McArthur River. This is the largest uranium mine in the world, that to the tune of $10 million a month in care and maintenance fees. So they shut that down for, I think, 2 years. During that period of time, they were buying uranium in the spot market. So rather than producing 18 million pounds a year, they were buying what they needed because they could buy it cheaper than their cost of production.
Mhm.
So Paladin shut down Langerheinrich, Cameco shut down Rabbit Lake, and then shut down MacArthur River. Kazatomprom adopted a value over volume strategy where they voluntarily limited their production growth for a few years. They claim that they are still doing that. They're ramping production a little bit now, but it doesn't matter. Demand is through the chart, through the roof. So you have this extremely oversupplied market. The cost of uranium fell below the cost of production. Mines are being shut in. And when the mines were shut in and Cameco started to buy, that really was kind of what pulled the sector out. And that above ground mobile inventory was worked through. I would say maybe 2 years ago was a point where you could say most, if not all, of the inventory that has been overhanging this industry for a very, very long time is now gone. And that's not to say that there's no inventory. There's a lot of commercial inventory in the world. And there has to be because the fuel cycle takes 2 to 3 years at this point. Utilities can't not fuel their reactors. So there's a lot of commercial inventory. But this industry that has benefited from cheap, abundant inventory now is 100% reliant on pounds coming out of the ground in the future. And that's risky. So that's the fundamental way that this market has changed from when I first discovered it until now. But of course, practically everything that you could even dream of happening to support this thesis has basically happened. It's truly unbelievable. We have the largest producer of conversion and enrichment in the world, Russia, effectively being banned for shipment to the West, and it has been allowed with waivers, but there's been a bifurcated market between the biggest producer of those services and the rest of the world, which has been supportive, especially of conversion and enrichment prices. But That's shaking up what typically was a very open global marketplace is now more complicated for utilities, which has been generally supportive of price across the fuel cycle. We've had the environmental political left embrace nuclear energy. So we went from, the Green New Deal from AOC in 2018 saying the world is going to end from carbon 10 years from now. Also, let's shut down nuclear. And, you know, it was obvious you can't have both of those things at the same time. Either you want clean baseload energy that produces no carbon emissions, or you're not concerned about climate change. One of those two things you have to compromise there, and they absolutely did. So now you actually have the left and the right politically in not just in the United States, kind of around the world, embracing nuclear energy as a clean source of electricity, which it is. It's the cleanest, it's the safest. Finally, these facts are being embraced. So that has been a big driver. Nuclear has a seat at the table at the COP conferences, and the EU is considering it green energy now, and it's which allows it to have green, low-cost financing and potentially even EU funding to support the development of nuclear, which is an absolute sea change in sentiment around nuclear energy. You have countries like Japan that has arguably suffered the worst nuclear accident of the recent past, even though nobody was actually killed by the radiation from that event. It was from the tsunami and the evacuation. But either way, Japan experienced Fukushima, shut down all the reactors. Now, polling in the country, the majority of the populace in Japan is in support of nuclear and restarting reactors faster. So you've had this unbelievable 100% like 180 in sentiment around nuclear and acceptance of nuclear energy. And that's very, very positive. You've had a couple more points. We can move on. I know I'm rambling, but this is kind of a deep context to give for where we're at right now and why the future is so bright for nuclear and therefore the uranium, which is what we think is going to have the most leverage and upside in this investment thesis. SMRs have really hit the scene with a lot of with hit the ground running, let's say. Small modular reactors. These are oftentimes advanced designs that are meltdown proof, that don't need water for cooling, et cetera, et cetera. There's a million different designs out there. There literally are 80 something companies developing more than 100 different designs of small modular reactors. And the use case for these is vast. It's not just electricity, it's heat, it's production of hydrogen, et cetera, et cetera. So there's a lot of momentum for small modular reactors globally. The Chinese are building reactors like crazy. They're building about 10 reactors per year. They currently have, I think, 34 reactors under construction in China right now. These are large reactors. There's 60 something reactors in construction globally currently. So there fully is kind of a nuclear renaissance happening. And then the last point I'll make here is that for the first time in the last 20 years in the West, we're seeing electricity demand grow, and it's growing very, very fast. So we had steep growth in electricity, 70s, 80s, 90s, and it tapered off in the 2000s, and now it's kicking back up again. That is largely being driven by AI and data center electricity demand. That's not the only driver. There's electrification of everything, of transport, of heating, of cooking. So we have huge demand for electricity, and that is incredibly de-risking for the existing nuclear fleet as far as life extending these reactors. If they can have reasonable amounts of maintenance and upgrades in the reactor parts, they can operate for 100 years. We're already seeing license extensions in the United States to 60 and eventually 80 years. There's a couple of applications for 80-year licenses in the US. So very de-risking for the existing fleet, and of course, a strong driver for new nuclear to be built. Now, nuclear takes a long time, so uranium demand for projects that are going to hit the ground in the next few years is going to be 6, 7, 8 years down the road. But the de-risking of the existing fleet, life extensions, even restarts in the United States is crazy, and Japan. Huge driver of demand for uranium, and nuclear has an incredibly bright future right now for all of those reasons.
A lot to unpack there, Justin. Thank you for again going into depth. I really appreciate that, and I'm sure everyone listening would appreciate that as well. I'm glad that you mentioned not to get on any form of political high horse, but I am glad that you just intertwined the political aspect there as well, because it's something I've always been critical of. Is people would I've always said that people would be happy to say, would you like a gleaner? Would you like a greener and cleaner environment? I think most people would hold their hands up and go, absolutely. And then when you say, well, nuclear is the answer, people get, upset by that. And it's like, well, as you said, they're not mutually exclusive. You've got to, yeah, I'm glad you mentioned that point anyway. I'll stop rambling.
Yeah.
So
Yeah.
what I've taken away from that is from where you started your experience in 2016 to where we are now in 2025, pretty much anything that you could think of that would be positive for the future of uranium has happened. So actually, we've been very exciting times, but yet think these things take a long time. As you say, it will take a long time to get things up and running. But do you feel that people are still not paying too much attention to this sector? And if so, why do you think that's the case?
Yeah, that's another good question. Right at this particular moment, I think that there's some important convergences and catalysts that are ahead of us that I think are worth mentioning. Over the last 12 to 18 months, the nuclear story has really been getting all of the attention. And the main reason for that is we've had stagnation in the uranium price because the nuclear utilities have largely stepped out of the long-term contracting market for a few reasons, which I'll mention. But the reactor plays, the picks and shovels, they've gone on huge runs over the last 12 to 18 months, which is fantastic. There's a lot of eyeballs on the sector right now. The uranium story, really more than anything, as any commodity investment, is driven by the price movement of the commodity. So, to give context right now, $80 a pound, 82 for trade tech and long-term contracting pricing. We've been in a $2 trading range for the long-term contracted price for almost 15 months. We saw the spot price go from the mid 50s in the middle of 2023 to over $100 in early of 2024. And then it pulled back down into the mid 60s, rebounded, and here we are in the low 70s. So we've seen the spot price experience enormous volatility. Now, what the nuclear utilities have done in this increasingly complicated and complex physical uranium market, and it's complex for multiple reasons, not just the tariffs on Russia and the actual embargo from Russia, both of which have been had allowances to continue to ship material. That actually could change today as we're speaking. We're hearing there's that the Trump administration is wanting to put more and more pressure on Russia, and one thing they're talking about is actually cutting off the waivers for those deliveries. It is actually illegal to import Russian uranium starting January 1 of 2028. And between now and then, still the DOE has still been granting waivers to the US utilities. So that's one aspect, but there's also tariffs. Is uranium included? Is it not included? Generally speaking, it has been not included in tariffs, but that adds a complication. Um, you also have a much higher price than you had 2 years ago across the fuel cycle, but especially for uranium. And so when the price went on that tear late 23 into the beginning of 24, utilities did some buying on the way up during that price move, but once it reached that enormously high price, they stepped out of the market largely and said, okay, let's stop buying now. We've got a little bit of inventory. Let's see where this settles out. And that's been the utility strategy for the last year. We're already starting to see signs of utilities stepping back into the term markets, not just the big RFP I mentioned from the South Koreans. Multiple large US utilities have small RFPs right now, seemingly kind of testing the waters, dipping their toe in the market, seeing what is the liquidity like, what is the pricing range looking like for 2027 to 2033. That's what we're seeing in the term market, and it's August. Usually, nuclear fuel buyers right now, nuclear utility fuel buyers are sitting on a beach in the south of France. They're not in the market trying to procure uranium. So this is a very, very unique tell in our estimation. As long as I've been following this market, it's been very rare to see term market activity in August. So this is leading into early September, the World Nuclear Association conference that takes place every September in London, which I'll be attending. That's where the entire industry comes together. That's the biggest conference of the year. And so there's a lot of discussion between producers and utilities. And typically following the WNA, we've got a fuel conference in October typically. And they come back with new budgets and a new understanding of the depth of the market, and you see more volume procured in the term market and the spot market second half of the year, mid Q3 into honestly, usually the end of Q1 into Q2 is the strong seasonal period most years in this market. So, as we're speaking right now, we're coming off of a year plus stagnation period. We've had nothing but de-risking events for nuclear over that year-long period, right? Reactors are getting life extensions. The environment that utilities are able to sell electricity into for the foreseeable future is the best they've ever seen. Electricity is getting more expensive because of the demand drivers I already mentioned. So they've got this unbelievable environment to extend these reactors and sell expensive electricity for the next 20, 30 years and beyond. So the justification for paying higher prices is there. And then you have entities like Cameco saying, we've got some liquidity in the next couple of years. It's very minimal. We go out late decade into 2030s. We've got the pounds for you, but we're not selling them to you at $80 fixed. You got to come to us. We want term market referenced pricing in these contracts. We're looking at $130 plus ceilings. And if you want uranium, that's what you're going to pay. So the responsible producers of the world, like Cameco, are holding the line on pricing, not just because they want to give it to the utilities, but because they have their own cost mechanisms. They have to recognize they've got an environment with high inflation, and they have a very large mine, Cigar Lake, coming offline in the next 10 years. They're going to have to develop something new to keep in the pipeline. So the big producers have historical legacy projects in decline or soon to be in decline in terms of production. The Kazakhs, half of their projects are going to be unable to produce, and they'll be declined down to nothing in the next 10 years. Langer Heinrich will be done by 2035, 2040, Cigar Lake 2035. So you have huge projects that are declining and they need to get more new big projects in their pipeline. That's going to cost a lot of money. So utilities are going to have to come to the table and play with the producers on their terms.
Hmm.
And that's what we have in front of us. And the best thing about this investment thesis, Rob, is that this commodity doesn't get pushed around by necessarily by the Chinese plans for industrial growth, like copper does. In some cases, the Chinese building reactors is a huge driver, and the Chinese have been big procurers of uranium. They'll be net buyers for the next 5 to 10 years, 100%. So it does. So in some cases, that is the case, but not like China announces a plan to expand X, Y, and Z, and the copper price jumps up 25 cents or something like that. That's not the case with this commodity. It's not doesn't get pushed around by OPEC announcements. This is a commodity that is unbelievably de-risked. The buying that's in front of us has to happen because the uranium isn't going to come from anywhere else. It's going to come out of the ground from the producers that are going to demand higher prices. So it takes a lot of patience. It's an extremely volatile sector. The equities are very, very volatile. But in my estimation, it's arguably one of the safest volatile investments you can make, if that makes sense. It's
Hmm.
extremely de-risked, and I have anybody who's done supply and demand work in the sector. We have our own just incredibly in-depth spreadsheets modeling out all of the reactors in the world, their lifespans, their demand for uranium per gigawatt, et cetera. And then a spreadsheet with all of the mines potentially in development and production. And it's clear we have an undersupply for the foreseeable future, and higher prices are coming. How high they go is anybody's guess, but they're absolutely going higher.
Yeah, that was one question I didn't want to ask, price targets, because I think it's how long's a piece of string was what I would have taken away from that. Again, plenty to unpack there, Justin. Just off the top of my head, my first question I had, actually, now you mentioned tariffs. Sorry, you could also add gold to that because of that recent 39% tariff announcement on, I think it's kilo bars and 100-ounce bars from Switzerland. So we can add that to the tariff fun. Secondly, you mentioned the big uranium conference. Might be a rookie question. Why is that in London? That seems a very strange place to have it.
You know, that's a really good question. I don't have the answer to. It's possible that the World Nuclear Association is based in London. I believe that they might be. So they're the ones that are putting on the conference. But as far as I know, it's always taken place there.
Well, no, fair enough. I say no from my experiences when it comes to UK nuclear. I think it's about as slow as you can get with regards to contracting and building stuff. But anyway, political and personal preferences aside, the other question I had for you, because I've seen, and again, this, I don't want to try and get political on this because there's pros and cons to it. You mentioned the amount of SMRs that are currently being designed and they're going to have multiple uses. I know that when I've spoken to Robert Bryce before on the podcast, he's critical of the amount of potential SMRs out there because then you get this idea of, well, which ones are best? How do we decide which contracts to give? And how does that help, pardon the pun, fuel the market? Do you think that by having so many SMRs and then the political system that we're used to in the West could actually hinder the speed in which these projects actually get produced?
When you say so many SMRs, are you talking about the sheer quantity or the varying designs?
Yeah, apologies. The varying designs, obviously, they're going to compete
Mm.
for which has got the best design, etc. And why. I should have been more specific with that. My apologies.
No, all good. I think it's like any any sector really that's operating in a capitalist environment. You have multiple entities trying to come up with the best way to skin a cat, and ultimately there will probably be a few particular winners. The varying designs in many cases though are different sizes, and the different sizes in terms of gigawatt capacity or megawatt capacity, I should say, because they're small really have different use cases. So we're looking at, in some cases, micro reactors that are 1 or 2 megawatts that might be used on, for example, like a Department of Defense military encampment. So that's something that could be used much more mobile. So those micro reactors could be used eventually, fit on the back of a semi truck and replace a diesel generator. Like that's the type of use case for that. Then you have, let's say, the 50 to 100 megawatt range, which is significantly higher. But that also has a use case to power, let's say, a smaller city that doesn't have a grid capable of accepting 300, 400, 500 megawatts or even gigawatt scale reactors. Then you get to what seems to be the most popular in terms of demand for the designs right now and the size right now, which is like the 2, 3, 400 megawatt, about half the size to a third of the size of a large reactor. So from what I can tell, probably the most popular design currently looks to be GE Hitachi's BWRX 300. This is a boiling water small reactor. There's one being built right now, the first one being built right now in Darlington, Ontario, and there's dozens in the pipeline. And it looks like the demand for that size coming from that company in a reactor style, or let's say a reactor design that is understandable. The world knows and understands boiling water. So it's not a gas cooled, it's not a high temperature reactor. It's not a more complicated advanced reactor. It's largely already approved and licensed in many countries. So and then different countries are going through their own processes of when it comes to government support of expanding this technology of determining reactors. So the UK just went through the Great British Nuclear SMR competition and whittled it down and ultimately decided on the Rolls-Royce small modular reactor design, which makes a lot of sense. They've been producing small reactors for nuclear navy, and they're producing, jet engines and everything like that, and they're UK based. So, and it's a very, very cool design too. The US has their demonstration program with two designs that they are putting funding towards building the first ones. That's TerraPower, which is co-founded by Bill Gates. Their Natrium reactor that's currently under construction in Wyoming to replace a coal power plant. That's an advanced reactor. And X Energy's XE100, also an advanced reactor. That reactor is a very high temperature reactor. They have a deal already with Dow Chemical to build the first units in South Texas to produce industrial heat primarily and electricity secondarily. So I don't necessarily see the number of designs as a detriment, especially as we eventually see, and we're already starting to see this in some cases in the United States with private capital getting invested in some of these modular reactor companies. So once private capital really steps up to the plate, they're going to they're going to look out for number one and choose the design that best fits their needs. And that is probably going to over time point to the biggest winners. And the biggest winners are the ones that are going to be able to build multiples, nth of a kind soonest, because then if you want that electricity, whether you're a data center operator or a nuclear utility wanting to add to your grid or to your fleet, you can actually budget around it because two or three or four or five of them have been built. And you know the technology, you've got the licensed location, whatever it might be. GE Vernova can give you a price. Bob's your uncle. So that's how I think it's going to go. Right now, it's kind of like an arms race. Many, like I said, 80 plus companies, over 100 designs are trying to get their design as quickly as they possibly can into a level where they can actually give a price or a price range to develop and build it. And of course, have that technology approved by the varying approval agencies depending on the country.
Do you think, and we've mentioned a couple of times, electricity and prices and what things might look like in the future. This is just a little part of me that wonders whether there should also be a big emphasis on improving the grid as well. Because I know that again, back home in the UK, it's a big issue. People talk about, the grid and it needs to get better, etc. But also, if you're then producing a lot of uh, nuclear energy or producing a lot of electricity as a result of nuclear activities, and then there's no uh, investment put into the grid, then that's going to send prices higher, which obviously is going to favour people producing in the first place. So it's just that little, I don't want to be cynical, but it's just that little part of me that does wonder that where's the incentive to actually then improve the grid infrastructure around all of this, especially with the amount of AI and data centers again that are gonna be on our shores moving forwards. I don't know if you've got a take on that at all, Justin.
I mean, we're already starting to see kind of the early signs of this problem, which is the data centers and the data center operators, let's say the big tech companies primarily, that are being supported, if not at least encouraged by federal governments in multiple countries. But right now, we're primarily looking at the United States and China. This is really the big AI race, and the two countries that are probably the furthest along in AI development. And basically, the general take coming from the United States administration currently is that we can't let China win the race to advanced general intelligence or super intelligence. The Chinese Communist Party having the keys to this is something that is unacceptable to the US administration. And they're going to do absolutely everything they possibly can to make sure that that's the case. So, with that backdrop, the tech companies are building data centers like crazy, and they're also competing against each other, trying to reach not only just artificial general intelligence first, but also to build the best AI platform that'll be the most beneficial, the most widely adopted. It's an unbelievable race that's happening right now, truly, and it just came out of nowhere. I mean, I mean, to give one example with Constellation, one of the larger nuclear utilities in the United States, and the operator and owner of 3 Mile Island, a nuclear power plant in Pennsylvania. Of course, Unit 2 melted down in the 70s or early 80s, and no, I think it was late 70s, excuse me, and has been shut since then. Unit 1 continued to operate and only shut down a handful of years ago. And so, and the reason they shut it down is because they didn't foresee um, a electricity market to justify the continued operation of that plant. I'm telling you this. I think this is 2020. It's maybe 5 years ago, and now they're restarting that reactor and they're restarting it as fast as they possibly can after procuring or securing, I should say, a power purchase agreement with Microsoft for 20 years at extremely high electricity prices. So it's shifted on a dime, and there's so much growth there. And the tech companies, of course, also have the deepest pockets. So they're
Mhm.
saying, we need this and we'll pay what we have to get it. Everything else be damned. But of course, we have this limited grid capacity, and we have the populace that needs electricity for everything for daily life. And that's definitely butting heads right now. And it's a problem, and it's going to be a problem. And electricity availability is very likely to be the limiting factor for the growth of AI. Maybe that's a good thing, maybe it's a bad thing. I don't really know. But yes, they are doing everything that they can currently to make sure they have the electricity sufficient to grow their data centers. And there's also an issue. They're not going to simply be able to buy all of the electricity at whatever price, driving prices through the roof for everybody else. We don't know exactly what this is going to look like yet, but we do know that this is a huge driver of the growth of demand, and all utilities are doing everything they can to grow capacity, whether that's building natural gas plants, building solar, and building new nuclear and restarting nuclear and life extending their fleet across everything in the US is getting extended. Everything. The only reactor we haven't modeled yet for an extension is Diablo Canyon in California. So both units there, which currently have licenses to 29 and 30. The utility has already applied for a 20-year extension, has been granted by the NRC, but the political regime in California hasn't yet approved it. We think they are going to have to. California, where I am, has the highest electricity prices in the whole country. We also happen to have the highest amount of solar penetration, which those two things are linked. Sorry, solar isn't cheap. So that's just kind of where we're at. Not sure how it's going to play out, but everybody is kind of working together to make this happen. We are seeing a lot of collaboration, and we're also seeing the emergence of these developers. So one of them, called the Nuclear Company, that just kind of came out of nowhere over the last 12 months, is working with nuclear utilities, big tech companies, the companies that actually build the reactors and the reactor parts, the federal government, and local communities. And they're sort of acting almost like the general contractor, bringing together all of the subcontractors to work together to get new nuclear built. And we expect we're going to hear announcements of new large Westinghouse AP1000s. They're going to be built in the United States, and we're going to see construction start in the coming years. That's what I expect to see very, very soon.
I'm glad you mentioned California there, because that's where I believe of the US based listeners to the show, which is, it's about 55% of total podcast listeners and readers. 14% of that 55% are based in California. So that's the last time I checked the stats. So I'm glad you mentioned that. Again, I'll leave my political thoughts to myself there. But moving forwards, this all sounds very promising. Thanks for touching upon on the grid there, because I know that's when people back in the UK talk about nuclear and the grid, they're starting to put two and two together, going, well, it's not making a lot of sense. Um, I wanted to ask you a question, and I know you've mentioned this company before, and I'm hoping I get the name correctly. Kazakprom. I always have problems
Because
saying
Adam
that.
Prom. Yep. Mhm.
Kazatomprom. I always have problems saying that name. A little bit more about them if you can, because again, they are again based in Kazakhstan, if I'm not mistaken. Obviously, got very
Mhm.
close ties over there to Moscow because of historical factors. So, how much of an influence and how much of a player are they likely to be moving forwards? And again, you've mentioned tariffs, but what's their position at the moment? And then, do you foresee anything happening with them moving forward?
The tariff situation currently is minimal for pounds coming from Kazakhstan as far as delivery to the United States, but there has been a bill that is making its way through Congress in the United States. I believe it's still alive, and it seems like it's more of a scare tactic than anything, but it's intended to put pressure on Russia, which is to say that anybody that buys anything from Russia will pay a 500% tariff. And and so that gets complicated because oftentimes the uranium out of Kazakhstan ends up being converted and enriched in Russia before shipped off to its prospective buyer. But Kazakhstan is the 500-pound gorilla in the room. They're the biggest producer in the world. Kazatomprom, which is the 70% state-owned entity, 75%, they're publicly traded for the minority stake of the company on the London Stock Exchange. They've been public, I think, for about 7 years, if I recall correctly. And they produce via ISR. This is in situ recovery production. And so rather than having a large open pit mine or a deep mine shaft underground mine, this is a series of wells. It's effectively an aquifer. It's a sandstone deposit aquifer. And you inject what's called the lixiviant. It's a liquid that varying means. In the US, they mostly use oxygenated water. In Kazakhstan, they use sulfuric acid. And so they inject acid into the aquifer and then they suck. There's injection and recovery wells, and they pull that injected acid through the ore body and it comes out the extraction well, having binded to the uranium that sits within that deposit. So it's faster, it's cheaper, it's much more efficient than underground or open pit mining. And their geology is perfect for it. And so they've been able to produce an enormous amount of uranium. So for example, this year we'll probably see about 165 million pounds of uranium come out of the ground globally, and 65 of that will come out of Kazakhstan. So they are, 40% of global uranium production almost. The political element in Kazakhstan is important because, yes, it's an ex-Soviet country, so they obviously have deep ties with Russia. They have done their best to distance themselves from Russia since the invasion of Ukraine. They have, while at the same time they had their own unrest in the country 4 years ago, maybe 3 years ago, and Russia kind of came to the rescue to kind of quell that unrest. So they've got complicated ties with Russia. They also are planning to build their first nuclear reactors in the country. And guess who's going to be building that? Russia. Russia also is the largest by a long shot nuclear exporter in the world. So they will make a deal with multiple countries. And right now they're doing this in multiple countries. India, primarily India, Turkey, and many others. I think there's a dozen countries where they're doing this. They'll commission the reactor, they will construct it, they will train the workforce, they will fuel it, they will decommission it, and they will deal with the nuclear waste at the end of the reactor's life. So it's the soup to nuts offering. You want nuclear? We'll get it done. And Russia does that. And they've got, I think there's 30 reactors in their pipeline, various stages of their pipeline exports. So Russia's building the first reactor in Kazakhstan. It hasn't hit the ground yet, but they just made that decision within the last month. Importantly, also, China's Belt and Road Initiative, and they're trying to procure everything they can from Africa, from Central Asia in terms of commodities. So China has been the biggest buyer of uranium out of Kazakhstan by far. So more and more of the future production out of that country has already been committed to China. So between China and Russia, so you have Kazatomprom, which is the company based in Kazakhstan, but the Kazatomprom has a bunch of joint ventures also with various deposits and various projects. And their biggest JV partner is Russia. Their second biggest JV partner is China. And they have a one project that's a JV with the French. They've got one project that's a JV with Cameco, and they've got one or two JVs with Japanese entities. Besides that, Russia and China, more and more of production out of this highly, highly important uranium producer is committed to the East. Most of the demand for uranium is in the West. 70% of the uranium demand exists in OECD countries. So the last point I'll make on this is the big development project in Kazakhstan right now is called the Budenovskoye project. This Budenovskoye 6 and 7 deposits. As you can tell by the name, it's a Russian joint venture. All of the uranium from this project is going to Russia for the first 2 or 3 years of its production. And after that, the Russians are probably going to be the largest buyer of the uranium from that deposit. So this is a largely a Russian-owned project. The Russians, as I mentioned before, have the most conversion and enrichment in the world. They are effectively short uranium. They don't produce a lot of uranium in country. Their best assets by far for uranium are their joint ventures in Kazakhstan. So if you're a Western utility and you're seeing your plants that you're currently operating get 20, 30, and 40 years of life extension, and you have historically relied on both Kazakhstan and Russia for your uranium, your conversion, your enrichment, this is a very, very different world that you have to contend with right now. It's making things more complicated for Western utilities, and it highlights the importance of investment in Western projects. Importantly, the utilities do need to step up to the table and sign contracts with the big producers and the big developing companies in the West to make sure that they have the incentive to get these projects going, because it takes many, many years to develop new uranium mines. So Kazakhstan has been, will be important for decades to come. In our estimation, we believe that their best assets have already been mined largely. Their development projects, I think, are not going to be producing as well as their previous projects. And as those projects get in decline, I don't think they're going to be able to produce as easily, as cheaply, or to the volumes that they've had been able to produce at in the past. So if I were them, if it were me, I would be signing way, way higher price contracts and pull back on production to preserve my legacy deposits. They are right now, at the very least, they are signing more contracts at prices that are, industry standard. But you go back into the 20 teens when they were 100% state-owned, they were just giving away their best uranium for many, many, many years. And that isn't happening anymore, but they would be wise to cap their production, in my estimation.
Well, I think that all just goes part or hand in hand with the sea changes, as you've mentioned at the start there, with where the industry was and where it is now. So, watch this space is what I would conclude from that. Justin, we've spoken about a lot today. We have touched upon geopolitical aspects of uranium. We've looked at the what it was like in 2016, what it's like now, and countries doing U-turns and all sorts of things to do with uranium. Is there anything that we haven't spoken about uranium that you would like to mention on the show?
Yeah, I think something that just popped into my mind as you were asking me that is that there's often questions that we'll receive about alternative fuels, about alternative designs that won't need as much uranium. For example, there's something called a fast reactor, and there's three or four of these being constructed right now, and it uses significantly less uranium. And but really, what we're looking at is when we have modeled out the commodity, all of the reactors currently operating, their expected lifespans, plus the reactors under construction when they eventually hit the grid in the next 5 to 10 years, that demand alone far outpaces the expected production globally. And uranium is the only fuel that the utilities are using to fuel their reactors. I'm not a nuclear engineer, but my understanding is that most reactor designs technically could operate on thorium fuel,
Mhm.
but there's multiple problems with that. That thorium fuel has to have some element, I believe, of plutonium as part of that fuel. There isn't really a thorium fuel chain set up, and this has been the reality since the 1950s when these things started to be built. So they're not doing it, and they're not about to do it. Now, will future designs molten salt reactors? The Chinese have built one that operates on thorium. Will that, grow in the future? I hope so. I hope that it does. For right now, it's really quite simple. The world's fleet has largely been de-risked by the growth in electricity demand. Reactors are being life extended, not entirely across the board, but in certain countries across the board. Most reactors are getting life extensions globally. We have the largest pace of growth in terms of new builds that we've seen in 20 years, and the Chinese are leading that. And uranium is the only fuel for these reactors to operate on. And so you're looking at this seeing this is something that has to happen. The utilities have an enormous amount of uncovered demand. What is uncovered demand? That's demand for uranium based on the operational capacity of the reactors that they operate that they haven't already covered in contracts. So if you sign a contract, you're going to get uranium delivered in 2029. You've got some coverage. So to speak generally, most utilities across the world right now are 100% covered for the next 2 years. They're 90% covered for the next 3 years, 70% covered for the next 4 years. You go out to 29 into 2030, 2031, the majority of nuclear utilities are uncovered globally. And that's only a few years away. So you have, I believe it's almost 500 million pounds of uranium that needs to be procured in long-term contracts out to 2035. And that number triples going out to 2040. So there's a huge amount of uranium, and the buying that needs to cover those periods of time is going to happen in the next few years. And so you have what's referred to in the industry as a contracting cycle, where a lot of utilities step up to the table, sort of collectively and at the same time, to procure large amounts of uranium in the long-term contracting market. We haven't seen a robust contracting cycle since the sort of last few years of the previous bull market. So like 2005 to 2012, most of those years utilities globally were procuring more than the replacement rate. So that is to
Mhm.
say the burn up rate of the global fleet. They should be buying on an annual basis, but they're not because they've been able to shore up on inventories. They've been able to flex up on previous legacy contracts. We didn't talk about that. That's okay. They just get more uranium in delivery than they initially signed a contract for. That's been happening. All of this is to say is that a contracting cycle is inevitable. And that's what we still have in front of us, despite the fact that we've gone from $18 a pound to 72. We've already had a strong run for utilities or for the equities, but now we have these mining stocks that aren't pricing in where the price of uranium is going to go. You didn't ask me, you didn't pin me down to a price expectation, but you can look at the very least incentive price for the marginal projects globally. So these are, the higher cost projects in Namibia, open pit, low grades, things like that. Some of the stuff in the United States, they're going to need north of $100 a pound at this point. So we expect the long-term contracting price to go from 80 north of 100.
Mhm.
But importantly, incentive price doesn't mean that uranium comes out of the ground the next day. You have to get to that price, and the price has to stay there and or continually rise. And then you develop a project that takes years, and then that uranium comes out of the ground. So it just moves very, very, very slowly. It's not like the price of oil goes from 60 to 80 and all of a sudden production explodes by 10% globally. That's not how it works in uranium. The price tomorrow could be $150, $200, and the projects that are marginal are still going to take the same amount of time to build that they would have at $100. So the price is absolutely going north of 100. Many in the industry that are smarter than me believe that it's going to $150 or higher.
Mhm.
And if we inflation adjust the peak of the previous bull market, $134 in 2007, that's north of $200 a pound right now. So absolutely, we could see the price more than double from here, and it wouldn't be a historic anomaly. And we're in an environment that is very, very, very different from the previous bull market. It's a structural undersupplied market for as far as in the future that we can see. And importantly, to reiterate, it's a market that is 100% reliant on pounds that have not come out of the ground yet. And that is what is new and unique about this moment in time that we've actually never seen in this industry. There's always been a certain amount of oversupply and inventory, secondary supplies that have come from government sources. In the past, Russians down blending was 20 years of 20 million pounds of uranium. That's been long gone. That's not happening again. It's a very, very unique point in time. It's a very exciting time right now, actually, because we have the strong season in front of us. We've got a 12-month period of stagnation and unbelievable de-risking of the entire sector.
Again, thanks for explaining everything so clearly. I've really enjoyed, I'm nodding along. For people watching the video, I'm just nodding along because I really appreciate that you're really putting this into simple terms. So thank you for that, Justin. And my final question, and you can go into this as in depth as you want. I know that people will lambast me if I don't ask you about uranium stocks. Of course, we've discussed all the market fundamentals moving forwards. And just like gold and silver, that doesn't mean that every stock is going to go up by X amount percent. Name names if you want, it's completely up to you. Obviously, I'd advise people to check out uraniuminsider.com anyway, because I know you do that as part of the service. What stocks, if any, or well, certainly people are going to be looking at stocks, what stocks should people have at least on their radar and maybe start doing some homework on in preparation for potentially profiting from this trade and this trend?
Sure. I honestly think that generally speaking, the uranium stocks, there's a few that I would say are fairly priced here, but the majority of the small and mid cap uranium stocks I think are significantly underpriced, especially if you're considering pricing in where the price is going to go. So there's a lot of uranium mining stocks that are developing projects that will eventually be in production at some point in the future and cash flowing that are trading at very, very low expected cash flow multiples. And so those look extremely attractive right now. I honestly think the physical commodity itself is a very, very strong risk reward play here. So the Sprott Physical Uranium Trust or Yellowcake PLC in London, these are funds that hold uranium to give investors exposure to the physical commodity without taking individual mining stock risk. So the Sprott Uranium Trust right now is currently today is at about a 7% discount to its net asset value. And at a time where the price is in spot price is stable in the low 70s because of the carry trade, and it's about to go up. So we really like the Sprott Physical Uranium Trust here right now. Some of the names are a little bit overbought, primarily Cameco and some of the nuclear names are severely overbought and overvalued in our estimation. We think we're going to see a rotation into the uranium miners when the price really starts to move. There's a lot of people that have been washed out of this trade, especially Q1 of this year into early part of Q2. So we had a decent little move in the spot price, a decent move in the equities Q3, Q4 of last year, and then that just got entirely washed out. We had unbelievably terrible sentiment. A lot of people threw in the towel thinking this is never going to happen. And this, for whatever reason, this sector is very emotionally charged for investors. So they get extremely exuberant when the price is moving up and the equities are rocking. And then just they get absolutely despondent when the price is going down and the equities are going down. And it's a very emotionally charged sector to be invested in. So if you like that, great. If you can't handle that, make sure you size your positions in a size that will allow you to sleep at night. Make sure you diversify. We always recommend tranching into positions. Generally speaking, historically speaking, August, especially early August, has been a good time prior to what typically is a strong run. We think we're going to have a good run this year. So, all of that is to say, we see the most value proposition here in some of the small and mid caps, especially there's certain developers that are severely undervalued here. Um, with all of that said, we have two different portfolios at Uranium Insider. We have what we call our focus list, which is a fundamentally driven, more of a buy and hold. We do some trading there, but not a lot. Those are the companies we want to hold for a long period for reasons that are obvious. The other portfolio we call our dynamic model trading portfolio. This is a smaller basket of the more liquid stocks in the space, and we trade in and out of that. That portfolio is up, I think, about 30 or 35% year to date, if I recall correctly. So we've done pretty well with that. Give our members an opportunity to trade more if that's what they like to do. Of course, the
Mm.
tax man loves the traders. So we generally like to buy the companies we feel are fundamentally strong and undervalued and hold them for longer periods of time. But we do also have that trading portfolio. And this market is a very, very tradable market because of that volatility and that emotionally driven moves. We've seen huge moves from low April, early April into just recently had a small pullback, but there's an underlying bid here. And it looks to us like investors are kind of looking over the valley here and expecting prices to move up pretty soon.
It's a sentiment that I would agree with. I think not just given everything you said, but from my understanding of, where the market is, where it's likely to go, then we're tying in, no, not just tariffs, we're tying in the overall picture with AI. We're looking at, sentiment as you've explained as well. So I think once you put all of those factors together, it's fair to say, that the future is, again, pardon the pun, relatively bright for uranium moving forwards. Justin, I think that's also a very good place to wrap up this episode. I will put a link to uraniuminsider.com with the post and the YouTube video that comes with this. I'd recommend people go over there and certainly have a look, and also look forward to picking up this conversation again in 2026 and to see where we are at that time.
Very good. It's been a pleasure speaking with you, Rob. Thank you so much for having me on.